Hey, good morning, everyone. Marty Missouri here, November 12th, 2021. I'm going to keep this one super quick. We won't do any news or any data. I want to update our Japan equity chart. I want to do just a little technical work with you on gold and silver and let you go early today. And then we're going to get on to our deep macro dive, which is Friday morning, where we update our own index and do a bunch of other work and make sure we keep our fingers on the pulse of global happenings and data and so on. As for the markets this morning, Dow's up 68 points. That's 19 basis points. Nasdaq Composite is flat, 0.02%. S&P is pretty flat, 0.07%. The Russell 2000 is up 0.18%. As for commodities, gold is down about 0.25%, 0.22. Silver is down 0.3. Copper futures are up 0.6. WTI oil futures are down 1%, 1.03. The ag complex is up 0.26%. The 10-year treasury is down, yields up just a little bit, and the dollar this morning is up 0.02%, so it's flat as well. Our core portfolio, as I speak, is up 0.19%. The leaders are, once again, MP Materials, which is a rare earth miner. Indian equities are up over 1% this morning, and these are all positions that we're in. Base metals futures are up 1% this morning. Uranium miners are up 0.89% this morning. Mexican equities are up 0.75%. And then we have base metals miners, just to give you a few more, up 0.7. Asia Pacific, and we're going to talk about Japan, that's up 0.33%. Solar stocks are up 0.5%. Material stocks up 0.5%. Viacom CVS up almost 0.5%. Industrials up 0.25%, and so forth. On the other side, AMD is giving a little back this morning, 0.8%. Our Latin America index, despite our Mexican index being up almost 0.33%, is down about 0.5% this morning. Brazil's having a rough go of it this morning, kept giving back some of that big rally that we saw earlier in the week. And then, silver and gold are both down. They're 20 bips now. So yeah, core portfolio is hanging in there pretty nicely, despite bigger positions like gold and silver down, at least on the morning so far. Remember, just short-term stuff, but I know lots of you are interested, and you're watching markets pretty closely these days. Okay, so again, just going to go through these charts and make it super quick this morning. So in front of you is that long-term chart of Japan, and what we have here, folks, is essentially a 30-year breakout. So this is the range for the last 30 years, right? There's the high, there's the resistance, there's the support. Okay, several hits here, lots of hits here on this line right here too, so you could call that a range as well, but we could never really break out of it. This was really the kind of the line in the sand. Well, the Japanese market has broke out of that somewhat impulsively with some momentum, tested it. In fact, I'll zero in. This is that resistance line that just couldn't be broken. So here it was broken, tested, big move, came down, not all the way down to the line here, and is moving back up. So that's a good looking technical pattern. I drew these flags, if you'll recall, right? So this was a nice flag pattern to break out, and the flagpole from the breakout line. The technician would make it the length of the flagpole would be the next area. That turns out to be about right there. So it exceeded that. So then you had this flagpole, and it broke out, failed the breakout line, but you can actually do this and say there's a downtrend that tested, and then you had double support right here, and then boom, we came out of that. So yeah, this is a very constructive chart. If this flag pattern were to ultimately work, the next strong resistance wouldn't occur until it's time to test, to virtually test this 1990 high right back in here. So yeah, again, good chart, like it, like the overall fundamentals, like our position there going forward and so on. Okay, gold. We'll actually look at the metal as opposed to the ETF. I mentioned that $1,800 an ounce resistance that was just super strong, nice, impulsive, with momentum move out of there. And then we have this line right here that's, you can see is that area about 1830, 1827. Boom, boom, boom. Well, it went right through that almost like it's not even there. And of course, nothing's going to go straight up in a line. So we'll see. This is gold reacting to the inflation data. And you got a nice strong buy signal here on the MACD, getting a little overbought on the relative strength index, the RSI. It's short-term resistance when you get up there. You can see when we hit it here, that was pretty much the end of this nice rally at about 1900. You can see when we got it here, that was where we were at 1950 earlier in the year, and it rolled over. So a little too positive too quickly, and that's what these overbought indicators suggest. Now, overboughtness can be alleviated with sideways action as well, so we'll see how strong this is. Note here that overboughtness came as the MACD was rolling over. Here, the overboughtness came as, you can tell by the histogram, the MACD was beginning to roll over. You don't have that here. You have a MACD that's still going up. So this is a better look than here. But again, short-term stuff. I like gold given the world that we find ourselves in currently. I like it longer term, but it's nice to see that we're getting a little action out of it to the upside finally. And lastly, here's your 1-year silver chart, daily chart. As you can see, silver was running into some meaningful resistance right here at about 24.80 or so an ounce. That line goes back, right, quite a ways here during the last year or so, and you can see it was resistance, and what was once resistance becomes support when you break it through. So look at that. So we broke through that, and then come down, and now we have this support line, right? So as I zoom out a little further, you can see this resistance line there. It goes back, well into earlier 2020. And so imagine just, being in this trade, being in silver, and just having it fall apart here. Swing traders maybe, right? Swinging between these two ranges, shorting it here, going long here. And then having it break out. So people who sold right here expecting it to fail once again, having it break out and then run away from them, see it come back, and they say, okay, then that may become support. So then they're buying it on that line, expecting it to continue to bounce. Here it threatened, right? Threatened to pierce it, but it held. So now you've got remorseful sellers waiting for that point to get back in, right? So they did boom, boom, boom pretty well, again, and then it failed, right? And then it's like, oh my gosh, that's a big fail. And people who bought that are now underwater, right? So now it's like, oh, just get me back to that spot, right? We get back to that spot, resistance, right? Resistance, resistance. And now just kind of silver's peeking its head above that. Now, what's meaningful to me on this chart right here is this looks like a reverse head and shoulders pattern. And that's a pretty compelling technical pattern. Okay, so typically, you have your head and shoulders, and people think of a head and shoulders as a bearish pattern, right? When it looks like this, you have your left shoulder. When you're looking right at it, you have your right shoulder. Often it's a little lower than the left, and then you have your neckline. And so there's your shoulder, there's your head, there's your shoulder. And then what often happens is that once you break down through here, then you get kind of that potential waterfall. You may come back and test that line right there, that neckline. Well, reverse head and shoulders obviously gives you the opposite pattern. So there's your left shoulder, there's your right shoulder, and then there's your head. So that's a pretty nice, looking fairly symmetrical reverse head and shoulders. This would be your neckline right here, right? And here we are actually breaking above the neckline. So that's actually a better line than the one that we just showed, and it's made its way a little bit above that. Of course, anything can happen in markets, but we like silver particularly. It's a not small position for us. Gold's a little bit more, but silver has got that precious metal aspect to it. But it also, of course, has a huge industrial use in solar panels, right? Solar panels need silver. Ironically, while I've been talking at you today, remember I said silver was down earlier. Silver is now up 0.21% on the morning. And so it came down, tested that neckline, and bounced back out of it. So again, the Japan chart, the gold chart, the silver chart, these are all prominent positions in our portfolio. We're exceedingly diversified, folks. We do have tech, we do have healthcare, we do have utilities and all those things as well. But of course, we're weighting the portfolio to what our long-term thesis and our assessment of conditions dictates. And we are hedging against something, big to the downside. We'll have our ups and downs for sure, but we want to mitigate the air pocket kind of risks that we think still exist, notably in this market currently. Have a great day. Thank you, as always, for watching and listening, and I'll be back very soon. Bye-bye.